A1 Trading to Tower, you are clear for takeoff. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
All right. Good morning, everybody. Welcome back to another live stream. I hope you all are doing well. We've got a lot to talk about here. The government shutdown did come to an end. Round of applause. Thank goodness. We've got a lot of questions around that. A lot of people wondering a lot of things. Where's the CPI report? Where's the NFP report? Where's the commitment of traders data? I do have some answers for you. I'm going to be sharing my thoughts on markets here as always during this live stream. As we get started, if you could just help me out, hit the thumbs up button, subscribe to the channel if you are new, and let's jump into it. I do have a quick announcement and just a quick thank you to everyone who is watching this right now, because I just had a message come through this morning that quite literally, it made my day this morning. This was just really cool. Jacob Miller from the audience actually says, I've been watching Nick trade for almost 2 years. Without him, I don't think it would still be trading. He's completely changed the way I view trading. When I first heard about Edgefinder, I thought it was a scam. However, one day on a live stream, he offered the Edgefinder free group or free access for a week. So I tried it, and it's really one of the best tools out there. This platform is so diverse. Recently got it. I live in Canada. Anyways, long story short, I just posted in our Telegram channel that really made my day, and it's because, you know, I love doing these streams because I love talking about trading and love learning about the markets, and you know that's really where my trading career, I should say, has kind of come from. Was this concept of loving to learn things about markets, and now I get to share it with people all over the world. And I just want to say I'm really grateful every day to be able to do this and to share trading and financial markets and learning about them with a community of really wholesome people. So thank you guys for being here. I hope everyone is doing all right. And with this government shutdown coming to an end, things get interesting from here. Things get real interesting from here. Let me explain why. So let's talk about the US government economic data that we are looking into now. So things like NFP and CPI, I'm not exactly sure how these things are going to go, but I believe with NFP report, they are not necessarily going to backlog and give us the data from the dead zone period since the government shutdown. I believe, and someone please correct me if I'm wrong on this, but I believe I saw notifications from the White House, etc., that they're going to roll forward and just pick up with the latest month's data, maybe November's data in December. I believe that's what they're planning on doing. CPI, we got a CPI report during the government shutdown. They pushed one out. I believe they're going to do another one, but not today. So with the government shutdown, right, these things, when the government shutdown ends, it's not, oh, everyone back to work and all the data that we didn't get to process is now suddenly available, right? There is still back to work, and some time will be needed to curate and put together these reports and do all the number crunching, etc. And the tinfoil hat people will say, for them to crunch the numbers in a way that looks good for them. Who knows, man? I don't know. But the point is, it will take some time for these reports to start materializing and being delivered. We are expecting to get some of that data soon enough. What about the COT report? I know that this dead zone has been difficult for many traders because a lot of you guys who use Edgefinder, you know that a big chunk of Edgefinder bias comes from institutional positioning. And I'm excited to tell you guys what I found out this morning. The commitment of traders report data, the backlogged reports, if we follow the 2013 government shutdown precedent, we are still going to get the backlog data. So we're going to get the dead zone data, I believe. I believe that is how that's going to work based on how things did in the CFTC did this in 2013. They kind of double posted CFTC commitment of traders data. And in this case, we are going to make sure on our side for our customers with the Edge Finder, we're going to make sure to do our best to get that data out, published. It does kind of go against how our data currently collects stuff. So we're going to work on that internally to make sure that we get you guys the commitment of traders data in our tools, visualized in a way so that you can start trading using it again. As soon as that data is available, you can bet your bottom dollar, but don't bet too many pennies because they discontinued the penny yesterday. I don't know if you guys saw that. The US penny has been discontinued for 2025. It costs more to make a penny than a penny is worth. That's kind of ironic, but inflation, it's everywhere. Anyways, the commitment of traders data, like I said, on our side at A1, we are going to do our very best to get this data into the system, in your indicators ASAP. As soon as that data is available, we are going to be on the button with it. Okay. So if you have Edge Finder, stay tuned. I'm very excited to get that data back and running because it is a huge component to the analysis process that we do on this channel. We track institutions very closely. So to not have that data has been a little bit frustrating. And I know for a lot of traders who use Edge Finder, commitment of traders data is a huge component of what they love in the tool. So we are getting it back. It's coming back, and I'm really excited. So as soon as we have that, it will be within Edge Finder. So stay tuned on that. Quick look at the put to call ratio. There's a couple housekeeping announcements, updates, etc. Just so you know, we will be on the button with it to get you guys that data ASAP. I know a lot of Edge Finder customers have been, wanting that data. We are waiting on it as well. Put to call ratio entered into bull territory, or it's, I should say, bullish sentiment territory. This puts me on pause to adding a bunch of longs on positions. So what this shows you here, we're looking at the put to call ratio. Although the government shutdown has taken place, we do still have tons of other data points that we've been leaning into. In fact, believe it or not, the government shutdown period has been actually some of my best trading this year. So why is that? Well, because we have other indicators. We don't just rely on US economic data from the government. We rely on other tools as well, which have really helped to maintain a strong understanding of what's going on macro-wise without US economic data, which has been really nice. So we have other tools. For example, crowd sentiment has been a major one this year. For me, we had bearish sentiment peak up dramatically right around that low of last Friday, which is where we ended up buying the dip on NASDAQ. I'm still long NAS. My stop is below structure here. We are looking at this area, basically this big candle that we saw last Friday, holding very nicely for now. And here's my plan with it. My stop loss has not been moved. We theoretically, if we do roll over and collapse lower, could get taken out. But you might say, well, Nick, isn't this forming a lower high, right? Well, here's how I look at higher lows, lower highs, all that good stuff, right? For me to consider this a lower high, here's the dangers of this, right? I don't think you can assume this is a lower high, because if we just make a move through those highs and head back to all-time highs, that was not a lower high at all, right? That was a false signal. We can't assume this is a lower high. How can we know when this is a lower high? Very simple. When the new lower low, a very obvious lower low forms, then we can call this a lower high, right? Right now, I like to use a really simple indicator. An RSI 4-period indicator, simple tool, helps me to filter higher lows, higher highs. Look at how clean this is, okay? We've got highs, right? These are higher highs, another higher high, higher low, right? Mark our lows, low, low, right? Our next low is over here. These are our higher lows. Higher highs, higher lows. RSI can filter beautifully. You see what I'm saying? Is this a lower high? By our definition, and again, a little bit of subjectivity there because everyone can choose what they want to use, I would say no, you didn't get a overbought reading on the RSI. Now, if this rips higher here and then fails out and starts moving lower, then yeah, you might get a lower high. But I think it's too soon to call that. Right now, we are still in a pattern of higher lows and higher highs. Market structure is bullish on the NASDAQ. Now, does that guarantee we're going higher? Never. You never have guarantees. You should never make a blanket assumption that something is going to happen in markets. You should always, always have an if-then mindset in trading. If XYZ happens, then I'll do ABC. Right? I've said this many times on my channel, and I'll say it a million more times, God willing. If you are right, then what will you do about it? If you are wrong, then what will you do about it? Those are questions you need to ask on every single trade you place. A lot of new traders, people who are not profitable traders, do you know what they say? They don't do any of this. They just say, I know it's going to go up. Well, what happens if you're wrong, right? You're going to be wrong in trading. Every single person looks like an idiot sometimes in the markets. Every single person. There's not one person who's right all the time. Pick your favorite influencer, the most intelligent sounding social media posting trader you could possibly think of. Yeah, they're dead wrong sometimes and they have terrible losing streaks and drawdowns. Everyone does. Trading does not have favorites. If you trade long enough, there is no luck. If you trade long enough and take enough trades, the market does not favor you necessarily, right? The market just does what the market wants to do. Great traders are not necessarily right all the time. They just know what to do. They have a plan for whatever happens. Like, this simple concept is so overlooked by traders because we as new traders, I remember, like, I'm not innocent of this. I remember when I was a new trader, my thought process was, okay, the pros just know what's going to happen. Like, they're really dead on accurate about what's going to happen all the time. It's not true. I'm telling you, it is not true. I have gone through the mud to become a profitable trader. I'm not right all the time. I'm wrong often. In fact, my win rate, I was looking at my stats on my momentum trading. I have about a 45% win rate, but my winners are much larger than my losses. So I lose more trades than I win over long stretches of time. Recently, I've been on a really good win streak. Over large stretches of time, I lose more trades than I win. And a lot of the winners are really small. Every once in a while, though, I catch a good runner. And that's what profitable trading for me looks like. If you're a momentum trader, trailing stops, etc., you have a low win rate, but high, large winners relative to losses. Hi, Nick. What do you think of the market valuation? Do you using the dollar, bonds, and gold to know the value of a currency? Is this something you would integrate into Edgefinder? Are you thinking like stocks versus gold or stocks versus bonds? It's a way to look at things. I typically just, I do look at the dollar as part of my analysis for valuations of companies, but let's get into some more charts. I want to go through it. Maybe we can come across that question a little bit more details. Currently in the mud with my trading. It's hard, man. Nothing about trading is easy. It's very difficult. Let's jump into some ideas. NASDAQ, I'm still bullish. However, definitely not adding a bunch of long positions at these levels. Let me look at the put to call ratio for NAS specifically, see if there's anything. Yeah, look at this. So NASDAQ's got a the crowd is very bullish on NASDAQ right now. That doesn't necessarily, this is not a reason for me to short the market, by the way, but it is a reason. If we know the crowd is very bullish, that's going to put me on pause from taking a bunch of long positions. Does that make sense? Like, I'm bullish on the NASDAQ, but if the crowd is also bullish now, right? They were very bearish over here. Now they're bullish. I'm going to be a little cautious on it. Meaning, I'm just not going to add longs. I'm just going to continue to hold my trade and watch what happens next in price action. I'm looking for a higher low. I'm looking for breakouts through the highs. If we can get some structure here to the upside, maybe even a break through the all-time highs, I will be taking this stop loss that I have on the trade and trailing stops into profit below any sort of higher lows that I can spot in this market. So that's how I'm planning to trade NAS. S&P 500 also looks constructive, still looks bullish. Yes, you have a little bit of a pause here consolidating, but I wouldn't read too far into this. I'd be curious to see if we can break to the upside, continue, get through those all-time highs. If so, maybe that's an opportunity to trail stops if you're in a trade, but I'm personally not in S&P 500. Let's take a look at the dollar index. Where are we at with dollar? Dollar continues to reject off of this 100 level for DXY. We do have sellers still kind of showing their strength here, pushing off of this level. Although we've had higher lows on this chart, but it's in the context of a bigger term consolidation. Neutral for the dollar at this time. I've mentioned that on the videos and streams recently. I don't have a really strong bias on the US dollar. Let me just take a look really quick at major currency pairs alone. The only reading that I get on major currency pairs within Edgefinder is bullishness on the Australian dollar, which is slightly, which is a bearish reading on dollar. So if I just out of curiosity, pull up AUD USD, what we can see here is that this is getting a bullish rating. I don't love the chart, but I wouldn't be surprised if we do head up in the short run back up to the 66.20 level, or perhaps even break back to these prior highs. So yeah, Aussie dollar looks strong. Let's keep going here. See what else we have on the list of to do today. Dow Jones getting the strongest reading within Edgefinder. Let's take a quick look at US 30, see what's going on there. We'll pull up US 30. Yeah, look at this chart. Beautiful, really clean upward trend. Take a look at your moving averages as well. Look at how clean that is. You have nice bullish momentum still in favor of upside move, in my opinion, when it comes to Dow Jones, NASDAQ, S&P, etc. These little intraday kind of sell-offs have been recently being bought. We'll see if that is the pattern that continues. But for me personally, if I was to trade Dow Jones, I'd be looking for a pullback, right? I'm already long NASDAQ, so I have no interest in trading it up here. I wouldn't short it. I wouldn't long it. I'm just staying on the sidelines. Let's keep going. Chinese stocks. I know Forex James is long Chinese stocks. I think he's probably doing great with it now. Look at that. Forex James, I saw him do a little breakdown on this. He's bullish on Chinese stocks alongside Edgefinder. Edgefinder's got a very nice score, +8 score for Chinese stocks, looking at technicals breaking out to the upside, clear upside. Economic data looks okay. I'm just going to take a quick peek. I'm not going to derail the stream too long because I want to stay moving here, but let me show you the economic heat map for China, because I'm really curious. We do have this data, and you can see we've got a nice reading for the Chinese currency, the yuan, but then we also have Chinese stocks getting a decent reading as well. CPI, interesting. They have very low levels of inflation there. GDP growth still in positive territory, beat expectations nicely. So that's bullish for both stocks and the currency there. Interesting stuff. Chinese stocks continue to be a strong reading with Edgefinder. I like the chart quite a bit. Keep going with that, Forex James. Well done, my friend. And upwards and onwards too. Yeah, I hope that continues to work. I shouldn't say hope, right? Hope is a dangerous word in trading. Rather, I think it should continue to work. If we're wrong, good traders know how to admit it. Bad traders do not know how to admit they're wrong. Blank period. Bad traders do not know how to admit they are wrong. Take that to the grave, put it on your gravestone, and leave flowers by your gravestone every day with that saying, okay? It's really that important. Anyways, S&P 500, Bitcoin, NASDAQ, we are still in copper, by the way. We're getting some risk on signals here from Edgefinder. Let's keep going. Take a quick look. And James just joined the back studio. James, I was just bragging about your Chinese stocks purchase. Very nice. Looks really strong here. And I was saying, I think that this should work out. I think you still got momentum here. Beautiful. I am a little bit jealous of that trade. Take a look at the moving average. It's got a nice upward trend here. Chinese equities, man, I feel like I missed the mark on this one. That was a beautiful play this year. The April sell-off was like picture perfect in the sense that we know that these sorts of events, these sorts of one-off, really terrifying market moves, oftentimes bigger picture are really great buying opportunities. I didn't really buy any Chinese stocks, and I feel that that was in line with my bias, though I've done pretty well this year with the buys that I did do. I mean, I bought Tesla, which is sort of a pseudo China play, right? I bought Tesla in April because I believed that the tariff fears were overdone. I've been proven to be right about that so far. Again, knock on wood, Trump, please don't tweet something right after I said that. But so far, tariff dynamics seem to have been overblown, both on the inflation worries and the economic repercussion side. That just did not materialize the way the market thought it would. And so this rebound has been violent and bulls have been rewarded. So I'm going to stay with the trade, stay bullish on risk on assets. Bitcoin, I got to talk about Bitcoin today because Bitcoin. And by the way, guys, what I'm doing here, if you're just tuning in, I'm going through the top setup simplified view here. What this is looking at is the data collected by Edgefinder in the sentiment, technical, and economic data reports. The full view would be looking at the top setups standard view. I just like top setups. I'll tell you 2 reasons why. Or top setups simple. I like that one a lot. Let me show you. Top setups is great because it gives you the line by line, column by column breakdown of what Edgefinder is deeming bullish or bearish. Why is Bitcoin getting a bullish reading? Well, you can take the time if you want to go through every single column and understand how Edgefinder's matrix of calculations is working to generate the bullish and bearish readings that you see on your Edgefinder. However, why do I like the simple view? Well, because there's 2 reasons. Number one, as a content creator, this text is bigger and I think it's easier for you guys to see. So I've purposely done that. We made this text bigger so that it fits on the screen a little easier. Number 2 is I don't necessarily, when I'm doing my trading, I like top setup simple because I don't necessarily need to go column by column every single time. Just give me a summary. What is sentiment generally saying about the asset in question? What is the technical score for the asset in question? What is the economic data generally saying? I love this view. It's my preferred way of looking at top setups when I'm doing it myself, when I'm not on camera, when I'm not live streaming. This is how I view Edgefinder's watch list as I go to the top setup simple view. And if I want to take a closer look at one of these, I can always go to the AI market scanner. So I can go over here and I can switch to like Chinese stocks. We're just talking about how strong they look, right? +8 score. Why is that? Well, I can break it down through our data here. So that's kind of the cool thing where you can go high level where I'm scanning for trades. This is where I do it. And then I can go down to the granular level to get a better reading of what that data is actually, where it's coming from. Russell also popping up here, and silver. Let's take a look at some precious metals, but in just a second, because we got to finish going through Bitcoin. Bitcoin monthly chart still looks okay. Weekly chart, check this out. I think we're hitting the 50. Yeah, we're tagging the 50-week moving average. This is make it or break it hour for Bitcoin. What I mean by that is the 50-week moving average has been critical for Bitcoin in the last few years. I think that if you lose I'll say it here. I think that if you lose the 50-week moving average, if we get a decidedly bearish close under the 50-week moving average, that's bearish. Like, I think technically that would be a truly very bearish signal. Let me show you. If we go back over here, this is the last time we lost the 50-week moving average. And you can see the chart just went straight down for the next several months. It doesn't look like that much on this big view, but let me show you. I mean, that's a big drop. So if we had just said, okay, from there, how low do we go? We lost 60. No, we lost more than that. We lost 70, 67, 66% of Bitcoin's value was lost after we lost the 50-week moving average last time. Markets don't repeat exactly very frequently, but we are in dire straits here for Bitcoin. What I mean by that is make it or break it time. If Bitcoin bulls are going to keep going with this, I think they probably want to try and hold this 50-day moving average, 50-week moving average. Every time that we've previously hit it in recent times, it has been a very strong buy zone. Are the bulls coming in? I'm going to lean into the answer of yes. In fact, I think that the risk to reward on Bitcoin looks pretty sweet. However, not from a short-term trading perspective. I think short-term momentum here, sellers are very much in control. But I think that if you are a longer-term position trader or swing trader, the 50-week moving average is huge. In fact, I think I might take a trade myself. I think that this dip buying opportunity could be a dip buying opportunity. Now, if I'm wrong, am I going to go down with the ship and hold it for 5 years? No. I'm a trader. I'm not a investor when it comes to crypto. Other things, gold, I'm both investor and trader. Crypto, I'm not a diehard crypto believer. However, as a trading vehicle, I love trading Bitcoin because it has such volatility, it's such great moves when it's moving in momentum. Like if we were to catch, let's just say I took this trade, right? And I am not pitching you to take a trade. At the end of the day, you should do your own due diligence. This is not financial advice ever on my channel. I'm just a guy on YouTube who blabbers about the markets all the time. Okay. So with that out of the way, this idea on Bitcoin, the risk to reward here, like let's just say we tighten this up and say, hey, if we break back under 98,000, got to cut it. Like if that's my idea, the risk to reward here on a break to new all-time highs, as we have done previously when we hit this 50-week moving average, very attractive. Edgefinder does also have, and this is pretty big, Edgefinder has a bullish rating on Bitcoin, despite technicals not being very impressive, right? We have a bullish rating with a 0 score in technicals. The economic data for the US looks decently like it's holding well, right? NASDAQ's been on fire. Bitcoin could be next, in my personal opinion. I'm getting the Edgefinder tomorrow. James, awesome, man. Shout out to you. Enjoy it, my friend. Have a lot of fun. And you're picking it up at the perfect time. You know why? There's 2 reasons. Number one, it's on super sale. But number 2, we're about to get a ton of data. Like Edgefinder is coming to life. I was talking to my team about this morning. Also, people keep having problems with the way I draw my star. Okay. Look, this is how I learned to draw a star when I was in kindergarten. So if you have problems with my stars, then you can side bow. Okay. Second of all, when it comes to the reason I say it's a great time to pick up Edgefinder is because it's always a good time and I want you to buy my products transparently. But actually, in all seriousness, we're about to get so much data. We're about to get economic reports out the wazoo, as they say, and we're about to get COT data. We're about to get all sorts of new upgrades. We have new features dropping for Edgefinder. There's never been a better time to pick up the Edgefinder because it's also on super sale for live stream viewers. You can currently get 45% off Edgefinder. Do not miss your chance to pick it up at the lowest price of the year. We kicked off our Black Friday sale in the month of November. There has never been a better time, in my opinion, to pick up the copy of the Edgefinder. Not just because, again, I want you to buy my products. I do. Like I'll never, try and shy away from that. This is a sales pitch, but let me tell you, it's worth every penny. It is a remarkable tool. And if you guys knew the kind of stuff that we're building for 2026, I am so excited. Little bit of a teaser. We want to do some more institutional tracking, specifically of precious metals, which is really exciting. I'm not going to say any more about that because it's very early days. We also have more AI market screening stuff coming in terms of news, headlines, things that are impacting markets now. Edgefinder is going places in 2026. It's already awesome. I'm not going to lie. Thanks to a lot of you guys. Wow. Robert feels passionate about it. Okay. So Edgefinder is, again, I think it's worth every penny. It is currently on the biggest discount all year. And last thing I'll say on this before we move on, some people have said, hey, yeah, it's still a little bit outside of my budget. Well, I got news for you. We can split it into 2 payments if necessary. Please speak with my team about this. They are working with a lot of customers right now who are interested in Edgefinder, but we are making it more accessible by splitting it up into 2 payments to make it more accessible to you. It's 45% off. You can split it into 2 payments as necessary, whatever you need. We'll drop the link one more time in the chat, or you can scan. Well, let me, James, if you don't mind switching also the QR code below me. We'll make it so that you can scan the QR code that is below my camera or click the link. Thank you very much. Or click the link that's been dropped in the chat to speak directly to our support staff. Let them know you're watching the stream right now, and they will get you that stream discount. Like I said, lowest price of the year and full transparency. I've been saying this, and I'm telling you, we do have plans to raise the prices of our tools over time. They have overhead to them. They are not free to run. We have many customers that we answer support tickets to every single day. There is cost to building and maintaining a product like this, and the product of the tool does tend to go up the more things we add. However, if you buy it, you pay once and you do not pay again, and future updates do not get upsold to you. When you buy the Edgefinder, People who bought it in the last, 3 years have watched us add numerous features and tools to the product free of charge to them. However, if you wait and the price goes up, you will have to pay that new price. You won't get the old price. So right now it goes from $1,400 usual price down to $770. In 2026, this price will be going up, and so will our discounted prices. There's not a better time. It's probably your last chance to get that low of a price on Edgefinder. So there you go. Nick, I'm one of the early buyers of Edgefinder, and after a couple of years, I'm now officially inside the VIP Discord as well. Bernard, that is awesome. That is awesome. Can you explain the carry trade on the Edgefinder a little better? Yeah, I love the carry trade scanner. Carry trade scanner is nostalgic for me because when I first got into trading currencies years and years ago, this was something I always wanted to have. It's a simple tool. It just scans currency interest rates to give us ideas of which currency pairs are possible candidates for carry trades, which are essentially where you hold on to something. Shout out Emily, by the way, where you hold on to a currency pair, long or short, and you collect positive swap due to it, right? So if I hold dollar Swiss long, now some of you guys might know this from the painful other side. Like if you've held dollar Swiss short, it's been expensive, right? It costs you swaps. Swaps can actually be paid to you. Rollover fees or carry trade interest can be paid to you. Here is how you can spot them. On the carry trade scanner, very simply, we also have a video link if you need to, just the carry trade explained. Why do we have 2 buttons that say carry trade explained? Who do I need to have a talking to? Oh, wait, it's me. I made this page. Anyways, I'll have a talking with myself later. Oh my gosh, that's dumb. Symbol on the left shows you which symbol we're talking about. The base currency rate is, of course, the first currency, and the quote currency is the second one. So the difference between this, the interest rate divergence, carry trade direction, if we were to buy GBP CHF or buy dollar Swiss, in terms of interest rate divergence, we would collect 4% on the year without leverage on this currency pair. Now, of course, that doesn't necessarily mean dollar Swiss is going to go up. It just is telling you that if you were to hold long for a year, you would get 4% in interest without leverage. With leverage, it could be much more than that, of course, with much higher risk. Yeah. What do you think about the dollar Swiss currency, Nick? Yeah, I'll take a look at it because I am curious. If dollar Swiss is giving me a good reading, it's one of my favorite things to be long because it pays you really nicely just to hold. However, I don't love it. So I'll tell you, dollar Swiss is getting a low score here. Too neutral for me to really love this setup. And if I just look at the economic data, which I tend to do for currencies because I hold longer periods of time, if we just look at USD CHF, you can see just the dollar Swiss is pretty much flat. So not really a trade for me right now, but something I'll continue to watch. And if it does pop into this list, it's one that I very frequently will buy if it sets up nicely. So yeah, that's the way to do it. Anyways, guys, we got to run here to our next show host. If I take any trades on Bitcoin, etc., I'll share it inside Discord. I am contemplating it. Just going to keep an eye on this one here today. Up next, we have Forex James taking over the stream here to talk more market setups. Stay tuned. He'll be in right after this.
Get over here. Come here. A little closer. Come here. Gotcha.
James, I think you're muted. Hello? Yep, we can hear you, but now we can't see you. Weirdly, you're still muted. Your camera comes back and then you're muted. Weird. Maybe just try backing out and coming back in. Technical difficulties. We'll be right back. Don't go anywhere. We're just waiting for him to come back in. Okay. Yep. We'll try it again here.
Hello.
Yep, we can hear you.
Perfect. Okay. I think you should be able to see me. Okay. Not sure what that was. Seems like a technical problem. Sorry, guys. Hope everyone's well. So let's just jump straight into it, I suppose. All good now? Perfect. Come on, James, get it together. I'm trying. So Australian dollar against the US dollar has just popped up. Not just popped up, but just popped up for me. It's on the top setups with a score of 6 on the eco only. So the economics alone without the sentiment score, which 6 for Australian US dollar for me, I think is completely valid. So I'm just considering where to execute on this position because we didn't quite come into this fib level. However, when it comes to situations like this in markets, you will often find people over analyzing and over expecting from markets. So you will quite often see retail traders drawing up very thin lines and all sorts of things. Like, I didn't tap this level, didn't tap that level. I hate that stuff because the markets aren't perfect. They will never be perfect. So then you end up in a situation like this where everything is telling me to be a buyer here. So we've got quite a nice trend on the H1. The H4 looks quite nice as well with the moving averages looking like they're about to form into a bullish trend. We've got the edge finder reading bullish, but we didn't come into the fib. So that again brings up the question, should I be taking the trade? I think I will, but I'll be a little bit more conservative on this. So I'll probably just wait for this H4 candle to close. If it closes bullish off this level, fine, I'll take the position. However, ideally, we actually flip back to being bearish. We come back a little bit lower towards the 0.618 level, meet the 200, and then we go higher. We'll see how that goes again. I don't believe in expecting the markets to move perfectly in accordance to what you want them to do. But anyway, we'll see. That's probably a topic for another day. So we've got the S&P, the Dow, the Russell, and NASDAQ on the US side, all reading bullish. I'm not really that interested in being a buyer, to be honest, right now. NASDAQ still not doing very well. I was on with you guys yesterday for New York Open, and we saw NASDAQ have a terrible, terrible day, or a terrible open. Was it here? Yes, I think it was here. So when I say terrible, it wasn't like a market crash, but it was quite aggressive downside, especially just for a session open. So what I'm looking for in NASDAQ is two things. So I'm looking for this gap to get filled. If you guys watch my content regularly, you will know I'm quite in favor of waiting for market gaps to fill, and then I quite like to enter on the fill once we do get that. So I'm looking for the fill here. That would also bring price to this H4 200 moving average. The trend is still completely intact in my view. Again, we do have the edge finder giving us a bullish reading. So I'd be more than happy to possibly buy something like this. The only downside for this is the large stop loss. Obviously, we've got to account for this side here. So it puts me off slightly. So I'm just sort of thinking about, again, considering the execution style I want to take on this one. Let me just see, actually, does this line up with 50%? It does, actually. That makes life a little bit easier. So the 200 moving average, we've got the gap, and we've got the fib, and we've got the trend, and we've got the edge finder. I think this is pretty cool. So this might be a trade I'm looking to take later today or maybe tomorrow, depending on when it comes. The only position I've got open at the moment is the dollar CAD. So very, very uneventful right now. Nothing too much going on. So we'll just leave that one there. I think Nick mentioned my China 50 position. Sad thing is, I'm actually not in this position anymore. So I entered right here once we had the rejection off this level. And this was completely self-inflicted, but I closed it at break even. Once we had this push to the upside, we had a second push, and then we had this really strong bearish H4 candle. I just wasn't overly optimistic in the position because it's a market in fact, I've never traded this market before. And that was mixed in with a lot of the doom and gloom in the markets. You know, we had a lot of Michael Burry selling. Overall, I just didn't have a great gut feeling. Now, of course, you can't trade on gut feelings, but I would have rather cut the position at break even than risk losing 1%. You know, I'm quite risk averse when it comes to situations like that. Hindsight, obviously, it was the wrong decision to make. So I'm looking to get back in at some point. The trend is still there. The edge finder reading is still there. The technicals are completely fine. So yeah, now it's just a case really of waiting for some sort of pullback to possibly get back in. Again, I think I was a little bit too impatient with that trade. Don't forget to drink water. That's always a good reminder. I've got a big bottle right here. Actually need to get a new one, but I've got a 2.5 liter water or something. DXY bull's about to lose grip if it continues down. Yes. So the technicals on the dollar on the daily time frame are very, very clear. I mean, this was sort of textbook sell opportunity, to be perfectly honest. I mean, we came into the 200 daily moving average. We created a double top. This was almost right on the 100 key psychological level. And then we had this nice doji candle and continued lower. So yeah, technically speaking, shorts here made perfect sense. But what you've got to account for is obviously the government reopening. It seems like people do expect that to happen quite soon. I don't think we've got a date, but yeah, it's definitely on the table as far as I'm aware now. The other thing, though, is obviously the jobs data we're going to get once we do get the government reopening, because I think we've got two situations that we're going to have. I think situation one is where we actually don't get the data from the shutdown and it's just sort of skipped over and we continue or start from the government reopening. I've heard that's a possibility. Second option is what I think is quite likely, where we do get the data and it's actually quite dismal. But then, you know, you spiral on a little bit. Are the markets going to care too much? Because obviously we had the government shutdown, obviously leading to worse labor data. So is the market going to take that data and say, okay, well, yes, we expect rate cuts from that, or was that just one-off worse data because of the shutdown and it's not a huge concern? So that's the other thing. So there's a couple of different dynamics to pay attention to when it comes to the US dollar. In terms of its technicals, I still don't think we're going to see anything really until we get the data. So I've been saying this for a while, but the dollar is range bound, and I would expect it to stay range bound until we have a clear reason to be buyers or sellers, or to drive a trend. Does that make sense? Because at the moment, all we've got is what Powell has said, and we've got some inflation data. We're missing half of the jigsaw puzzle. So it's not a very good environment for long-term speculative trading right now. Which is one of the reasons I'm not overly involved with the US dollar, which is why I've only got dollar CAD. And that's why I moved to things like China 50 to try and get out of that, the US situation. Shorts on DXY 100 made sense. Also because DXY won't break 100 unless you get something major. Yeah, that's pretty much it. Yeah. You'll buy 2,000 lots to help me out. Thank you, Joshua. I appreciate that. Take him on for the team. What a legend. What about euro dollar? Euro dollar. So I think euro dollar can come lower, but I don't know. Oh, well, no, don't know. Whether it's going to happen, I would say kind of low probability. So I do think it can go lower based just on the trend, just on the way that the market's behaving. It looks like this is going to be a lower high. However, as we've just mentioned with the dollar, I'm not overly confident. We might get some sort of correction back out to these lows, maybe this low here. I'm not super bearish on euro dollar right now. It's possible we actually do start creeping higher. And as we looked at yesterday, I showed you guys the ING 2026 targets. It seems like 1.2 is general consensus, or well, sorry, 1.2 is general consensus. 1.22 is ING's end of 2026 target. So right here. So I think it might actually be beneficial to look for long positions on euro dollar, long term, short term, possibly look for some shorts. So what I would like to see is this becomes a lower high. We start bottoming out at this previous low, which is around 1.139 ish. And then we start building some longs into 1.2. I think that's a reasonable idea to have. But what would drive this downside, I assume, would just be the US reopening. And if we did so happen to get some better data. DAX. DAX is interesting. I don't really look at the DAX anymore, to be perfectly honest with you. Let's see. Does the Edge Finder have anything? No, DAX is pretty much neutral with a score of 1. So fundamentally, based on economic indicators, there's absolutely nothing there. Technically, I'm kind of leaning towards longs here. We've got a really nice moving average cross here, just indicating that the trend is coming out of this downside that we had here. So just that trend change can be a nice little indicator for us. If we can come down, retest here, and then start pulling back to the upside, whether it be an H4 engulfing candle or just a bullish candle off there, might be worth taking a shot more just on a momentum trade or a trend following trade, rather than it being a longer term economic idea or economic trade. But yeah, to be honest, that's, I'd say, pretty much a forced idea. I don't really have anything. I wouldn't actually look to trade this market. Went short pound dollar with SL above recent resistance. That sounds good. Let's take a look. So I assume your resistance will be here. So it sounds or seems like you're taking a very similar approach to what I'm looking for. I wanted to see price come a little bit higher, sort of double top off here at this 50% retracement, stop loss above the 200, and then a take profit slightly lower. So that's kind of what I was going for. So I quite like your short idea. The only thing I would say is if your stop is here, it might just be a little bit tight. Dant, Nick is not on the show right now. You've missed Nick, so you don't need to spam his name. I'm sure he's watching, or his team is at least paying attention. So if you got something to say, I'm sure you can say it. You don't need to spam. What is the Edge Finder used for? The Edge Finder is in the name. It helps you find the edge. So what we do in trading a lot of the time, or what an average retail trader will do, is something like this. They'll have the charts, they'll do the drawings, they'll do whatever it is they want to do. But that's reaction. That's reacting to what's already happened. You know, all candlesticks is telling us the buying and selling volume at that time. That's all it does. So if we're buying or selling based on, you know, let's say this double top here, great. We could say, okay, well, people sold at that level, and we're in a downtrend, so it's likely people will sell again. But that doesn't give us a why. That doesn't give you the solid reasoning as to why that market should do what you think it wants to do. Does that make sense? And that's why we use the Edge Finder, because this doesn't tell us there's a support or resistance. This tells us basically what the institutions are paying attention to, but simplified for retail. So GDP, manufacturing PMI, services PMI, retail sales, CPI gives us the economics. So if the economics are bullish, so as they are here for for the Australian dollar with a score of 6, all of these economic indicators add up to a total score of 6, telling us that the indicators for this market or the economics for that market are bullish. So actually you might want to be a buyer. Does that make sense? And obviously vice versa for sellers. So it just gives you that extra layer of confidence, that extra layer of reasoning behind placing a trade, rather than it just being, again, I'm buying off a support, or I'm selling off resistance, or the moving average cross. It just gives you, again, that extra layer of certainty with your positions. I was going to get on silver earlier. Yeah, I mean, silver. So, well, I suppose it's not silver's fault. It's my fault. I really fumbled the bag on silver. So I was long, pretty much right here. So I bought on this doji, this bullish candle right here. I closed the position, I think it was roughly around this period here. And that's just because I wasn't overly certain. I did really think the metals needed a larger pullback. So I just decided to cut the trade, take a small loss, and I'll reposition at a lower price. And obviously that's not happened. So I took a small loss, and if I just held it, it would have been quite a large winner. So it's unfortunate. But the other thing now is, what can we expect going forward? So I'm looking for either a retest of this previous resistance and continue higher. I think that's completely valid, but you know, are we going to get that much of a pullback again? I don't know. We'll see. On the other hand, it could just be a case of looking for moving average pullbacks, pullback to 50, a 100, 200, whatever it may be. That would also be completely valid. On the other hand, it could be a 50% pullback to the fib. So many different areas and levels and things going on right now, that it might be a case of just taking a couple of small attempts And once you get the runner, you can add into that runner and size up to a larger position size. So that's pretty much all I've got right now is basically just waiting for a pullback, which is annoying because I've been saying, oh, I need a pullback. I want a pullback. I want a pullback. We get the pullback and I fumble the back. It's one of those things. Anyway. Hi, James. GBP CAD selling analysis. Yeah. So pound CAD's probably the number one idea I've got right now. So I'm just waiting to see if we can get some sort of rejection up here. We are, bearish with a score of -11 on the edge finder, which is strong. And we've got a already established downtrend. We've already had the break and retest of previous structure. So it seems like I was obviously saying this with a bit of hopium, but it seems like a little bit of a brain dead trade, really, to be honest with you, in terms of it's just sell any pullback we have. Obviously, that could go horribly wrong in a couple of weeks' time, obviously, if it doesn't work. But right now, as things stand, selling pound CAD on pullbacks, it just seems like a very, very straightforward idea. Ball out. Hello, my friend. Hope you're well. CAD Swiss. Yeah, we can have a look at CAD Swiss. I don't think I've got much for it, but yeah, we can certainly see. What do we have? Is there anything here? I don't see anything. CAD Swiss, it's got a score of 2, so it's definitely not. It's definitely not a market I'm overly interested in being involved in, and this trend is giving me the spooks. So I definitely wouldn't want to be buying into this, to be honest. This is one of those very rare situations where I would probably actually not take the edge finder direction and more just go with momentum. So if we did get a pullback, it might be worth going short and just looking to see if we can continue this downside. But again, I've done this in the past a few times where I completely ignore the edge finder and go with my own bias because the technicals are so clear or strong or whatever, and it doesn't work out. So I'm a little bit traumatized from doing that, but I just don't see an opportunity to get long because you could look for an entry here, fib pullback, whatever it may be. But again, this trend is so aggressive to the downside. I can't justify being a buyer, but again, being a seller fundamentally right now isn't the play, it seems. Hi, James. I'm thinking of shorts on US oil. Yeah, we just got out of our shorts actually on Brent. I don't trade oil, but what we can have a look at is the technicals. I would expect this candle to get corrected. So, I think ICT people call it an FVG, whatever. I don't really care about the terms. But when we have strong impulsive candles like this, you will often see them get corrected, like we did here. Strong impulsive move to the upside. Eventually, it did get corrected. Same thing here. Strong impulsive move down, got corrected. So I would expect some upside here, just to sort of correct this left side candle. I would then be looking to go short off of that, so somewhere around here, so maybe a stop loss just above these highs, and a take profit wherever you deem fit. Again, I don't really trade oil, so I don't have much price targets or anything in mind, but I think this is probably an optimal idea. So maybe something like this into a 50% retracement. It would also then come and meet the moving averages and a relatively large stop. Fundamentally, I don't think there is anything. Score of 2. So actually, we are kind of leaning bullish on the edge finder, but a score of 2 to me is it's a neutral reading, basically. So the edge finder is not telling us too much there. James, looking forward to join your Discord in future. Bank reports are too good to pass on. Good stuff, Sluggy. I appreciate it. Hopefully, I'll see you in there soon. Sluggy, actually send me a DM before you join on Instagram or something. I'll shoot you a discount, since you've been a supporter for a while. Can you look at dollar yen? What do you think about German DAX? Pound Swiss? Okay. I think I'm the last guest on today, or the only guest on today. So A1, guys, if I go over time, just send me a message and I'll hop off. But I think we've got some things to go over here. So SPX or S&P 500 pretty much falls in line with what I said about NASDAQ. I'd be more than happy to just buy pullbacks, really. Oh, side note, did you guys see the Michael Burry thing? So what he did, well, no, sorry, not what he did, but it was reported that he shorted like I think it was, what was the reported amount? Was it like 900 million or something? I can't remember what the number was, but it was a crazy amount of money that people apparently, or sorry, that he apparently shorted in Palantir and Nvidia. That's not true. So he didn't actually short much at all. It was only 9 million. And when I say only 9 million, that's really not that much, especially when it comes to people like Michael Burry and financial markets. Not much at all in terms of money. So that fear of that people had, I think, is kind of gone. So that sort of what do I call it? Like pessimism that I was talking about earlier when I was talking about China 50. I think that's kind of out of the water now. So yeah, I would be quite happy to buy on dips. So maybe here, this is not great. If we come down to this 200 and again fill this gap, that would be a pretty strong trade in my opinion, something like this. We do have, again, we've got the Edge Finder reading bullish on all of the US indices, the S&P, the Dow, Russell, and NASDAQ. So I think technically, fundamentally, all of those markets are pretty good for higher prices. It's just a case of getting into them. But what you also need to be careful of is the government reopening. It's likely it will be positive for the market. However, something we also need to account for is because it's so widely expected that the government will reopen and the jobs data is going to be poor, it's very, very likely that it's already priced in. So I actually not 100% sure really if it would have much of a reaction. It could, you know, when it comes to news and fundamentals, it really depends on the number itself in context, but I'm sort of talking in a blanket statement right now if you follow my drift. Dollar yen. Let's see. So we spoke about dollar yen yesterday, and my point really was that I don't think we can do anything right now. And there's a couple of reasons. So if we obviously look at the trend, I mean, it's bullish. There's not really anything to say here. It's just a buyer's market right now. The carry direction is still to the upside. So we've got the trend, we've got carry. We've still got slight US optimism. The US data right now isn't awful. So it's supported. We've still got the idea that the Bank of Japan isn't going to hike until 2026. We've still got relatively, and when I say poor data for Japan, I'm talking relative to the US, sort of not enough to support a change in trend at least. So everything right now is bullish in my opinion. But the problem is intervention risk. So intervention risk comes between roughly 150 and 160. Obviously, it's a large range, but we're in the zone now, or in the area where we could start seeing an intervention come to play. So I don't want to be involved with that. So I don't really want to be a buyer. On the other hand, we could see downside come pretty quickly in 2026. And the reason is because of that Bank of Japan hike. So if we could see the Bank of Japan, I mean, it's not going to be the same as what we saw previously when they came out of negative interest rates, because I think this has been so highly expected, it's priced in. But that could change the drift to the downside as that yield gap starts to thin out a little bit. So there you go. That's dollar yen. Sluggy, no problem at all. He shorted 200 million during peak 08 crisis. 9 million is nothing. Yeah, exactly. That's the thing. I don't know where people got the 900 million from. But yeah, CNBC, Financial Times, they were all reporting that he shorted 900 million. And I think obviously because his name carries weight and it was a large amount of money and it was on big names like Nvidia and Palantir, everyone was like, oh my God, what does he know that we don't know? And obviously contrarian thinking comes into play massively, but you've still got to account for why would he want to short 900 million of two of the best performing stocks, you know? But obviously that's not the case. Now it's been cleared up. What do you think about dollar Swiss currency, James? Is Swiss strengthening or is that just dollar weakness? I think it's a little bit of both. We spoke about yesterday. We spoke about the Swiss yesterday. And I'll be honest, I've got no idea what's driving the Swiss strength right now. I don't think there's been any major catalyst to drive a large move. I could be completely wrong. Maybe I have missed something crucial, but I don't think I have. So given the market behavior here, it doesn't give me anything because we're sideways, slight downtrend here, but that's not enough for me to take any positions. The Edge Finder, I'm fairly sure, is neutral. Let me just double check. Or is it not? I can't find it. Oh yeah, no, sorry, it is completely neutral. We've got a score of 0. So in terms of dollar Swiss, I see absolutely nothing. I suppose, again, this is kind of forcing an idea, but maybe you could look to buy on these lows. If you're a dollar bull, if you're a dollar bear, you would essentially do the opposite. You would actually be looking to do or sell on these pullbacks towards the moving averages, maybe something like that. Again, I'm trying to force an idea, long and short, because I don't have anything to really give you there, but hopefully that gives you something at least. I believe it's already priced in. Yeah, I mean, the markets are very quick. They're very, very efficient. So when we hear specifically when retail hears something, unless it's a breaking news headline, of course, like an unexpected event, like a war or a disease or whatever it may be, generally you can expect it to be priced in. Retail normally are going to be a lot slower. And it's not because of the tools it's not because we don't have tools for speed. It's just because institutions have better tools for speed. So like Bloomberg Terminal, it's pretty much instant. They've got algos to price things in and place bets, and they've got teams and teams of analysts to do all of this for them, and then they can give it to the traders. And retail will always be slightly behind, but we can still capitalize on the move. So I don't know where I was really going with that, but it was a talking point. Q1's coming, James. What do you mean Q1? It's pretty much the possible trade deal with Switzerland. Is that what it is? I remember you told me that yesterday. I'm gonna copy and paste what you just said and put it into a notepad so I can look this up after stream. Because I've been slightly off for the past week. I'm not overly up to date with everything that's going on. Burry deregistered. Yeah, he did deregister. No, I know Q1 is Q1. I meant what's coming in Q1. Gang Scott. But yeah, no, he did. It's not a huge move in terms of businesses. It's quite common for people to deregister and still operate. I'm not 100% sure what his goal is there, but anyway, it's not a problem. So pound CAD, pound Australia, pound Swiss. So actually, this is good. I like to see this because, guys, quick plug. If you are not already signed up for the webinar that is being held, the 2026 Look Ahead, I'm not sure if that's actually what it's called, but that's what I'm calling it. It's where I think we've got me, Nick, Chris Pulver, and I think there's Marco on there as well. We're all coming on. It's private, but it's free. So it's invite only to talk about trade ideas and market dynamics for 2026. I would highly suggest signing up to that if you haven't already. Again, it's completely free, but what I'll be covering is reflected here already very, very nicely. So just keep that in mind if you do turn up, because I'm going to be, if anyone watches my segments regularly, you will know that I'm a big hater on the UK. And I always tell you, I'll tell you, I'll give you a document why, or I'll tell you why in a webinar. In this webinar, I do that. I've broken down everything, and you'll see why I think the UK is heading for a bit of a disaster. And it's all reflecting here already. Obviously not everything, but you get what I mean. Pound is reading bearish, which is a great sign for me. Explain economic indicators. Of course, I mean, it's a very, very long topic, so I can't explain everything, unfortunately, but I can do my best to quickly give you an understanding. So we've got different things we pay attention to. I'm going to use the Edge Finder for reference, obviously. So we've got the sentiment, or you could call it sentiment analysis, technical analysis, and economic analysis. We call it economic indicators because that's kind of the real term you should use for it. So sentiment is obviously COT and retail. So it's basically who's in the market and who's doing or who's placing what trades in what direction. Technical is like seasonality, trend, support and resistance, those types of things. Then you get the economic indicators, which are things like GDP, PMIs, retail sales, CPI, etc., etc. So the economic indicators basically give us the why of the market. So it's why would the Dow be bullish? Okay, well, the economic indicators here are bullish. So we've got GDP, not manufacturing actually, but we've got services, we've got retail sales, we've got inflation, we've got unemployment change actually is working against us. So economic indicators are basically what you see in a Forex factory or whatever news calendar you use. They are economic indicators, and that's what the Edge Finder takes in, processes, and then it gives you the score of whether it's bullish, bearish, or neutral. Again, it's a very, very wide topic. You know, I could explain every single one for you, but that would take me a long time, and I'm fairly sure Nick has got videos on his channel about all these things, so I would suggest going checking those out. Again, it's a long topic. So last thing I'm going to leave you with, because my time is up and I don't want to make the A1 guys work overtime listening to me. Last thing I will say about fundamentals is they are a very, very wide and complex thing. You can go down massive rabbit holes. You could basically spend your entire life learning about economics. And I'm not really joking when I say there's so many different moving parts. You can go down to micro levels of economics. Please don't do that. Just to keep it short and sweet, do not do that, because it's a waste of time. You're not an analyst, you are a trader. And that's one reason that I love the Edge Finder. And I'm not trying to sell you anything, by the way, but I'm just using it as an example. Because we're not analysts, we are traders. We don't have the luxury of time to sit there and build economic forecasts and do all of these crazy things. We have to do our jobs, which is trading. So what you should know about fundamentals is basically just the basics. And obviously, if you're wanting to go into a professional trader, this doesn't apply to you. I'm talking about average retail. You can learn what GDP, you don't need to learn how GDP is calculated unless you want to calculate your own GDP. Obviously, it's not necessary though. For example, learn what manufacturing and services are. Learn why the 50 number of those is relevant. Learn what the contraction expansion means. Retail sales, you don't really need to look into that too much. Obviously, again, I'm talking very, very bluntly in blanket statements. But you don't need to learn how it's calculated. You need to know what it means and what it means for the markets and what context you need to put it in. CPI, it's the same for all of them. You don't need to understand the very, very minute details, because then you're going to get confused and it's just too complex. There's no need. And this is why the Edge Finder is so cool, because you don't need to do any of that. You don't need to even care about it. You can just say, okay, Dow's bullish. Now I need to find a setup. You know what I mean? So that's that. I don't think there's anything else for me to talk about today. I don't think I missed anything either. The sign up link for the webinar is there. Again, it's completely free. Please sign up to it, because everyone in there has put a lot of time and work into creating some fantastic content. I've seen Chris Pulver's. It's really, really good. So don't miss it. And mine, obviously, mine is fantastic. Guys, have a good one. Stay safe. Enjoy the rest of your days. I'll see you tomorrow. Stay safe and don't get margin called.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. All month long, our products are 40% off, the biggest discount of the entire year. You can get access to our trading softwares, trading community, and so much more right now on our website, a1trading.com. Make sure to subscribe for future streams, and don't forget, if you're looking to get access to free courses, prop firm discounts, and free trading tools, as well as massive discounts on all our products, head over to a1trading.com. See you next time.